Good evening, everyone. This video is going to be a trading review and support session for April the 19th, 2023. So we really didn't have any news to speak of today. We had a beige book release late this afternoon, and I was done trading long before then. But we had it. So let's kind of go through now. The new discipline, of course, that I'm trying to achieve, and haven't achieved it that much, but I'm either going to achieve it by talking to myself every day, or just go cold turkey and not trade until after 7. So I believe that these low volume days are a real source of problems after the market opens and until 7 when trends can kind of develop. I proved it again today, and so I'll keep trying it for at least a couple of weeks, and if I don't succeed in improving my discipline in the morning, then I'll just start trading after 7. I'm telling myself that. So anyway, here's the open. Right, let's go through the daily real quick on what we were looking at. So it ended up not a significant day. Pretty small body in terms of body size. Had some range in it today, being an FOMC day. When we opened up, let's look at the big picture chart to give us a little bit better idea. So let's see. Here is in the Asian session, we're coming off of the low. So here it kind of is, and it was pretty much an up day. Went back through yesterday's close after having been down around the S2 area. And a little bit of a down close, but not too much. Lower high, lower close, not too much. Now tomorrow we're going to get unemployment news, so that will likely increase volume. Is it going to be a high volume day? I don't know, but anyway, we probably will see a little higher volume. Excuse me, coming into the open. So when we were opening up this morning. Right, so it was already kind of trending up. So here's the open. We're breaking out of this opening range area. So I took a trade here, and I took one more trade here, right? And both of those were successful. Now, even though I told myself, okay, that's all I should do until the push time frame, right? Well, that's what I told myself, but I didn't listen to myself, which is a crying shame, because I went back. I mean, I ended up making money, but I was back and forth, even had to reverse a couple times, and so totally not how I want to do this. So a short entry in here, right, would have worked, even though the 2 by 200, the VWAP and the minute average of those kind of things were there. It would have worked. I waited until it cleared those things, right, and cleared the 2 by 20. But then again, that was on a low volume day. I think they actually wait for those type of things on a low volume day to try to steal your money, and they certainly tried to steal my money. So it's in the right direction of the trend, right? But it's just in that low volume, bad time of day to trade that I just have to calm myself down in doing that. So I went short here, added to it here. I exited one, right? I exited one, and I think I might have had a gap between them. So I exited one, but didn't exit two. Market came back up, and I said, okay, well, it's at the 1 minute high. It's at the slow flex. It's kind of trying to go under. So this was not a great addition, right? But anyway, I kind of got fooled a little bit. And again, market's just not doing anything. It's going back and forth. So it popped up, right? No expansions, but I got kind of bluffed out. So it was kind of breaking out of these areas. So I reversed, which ended up being a bad move, right? Had I just stayed short, right, with the I probably would have come down and been able to, at least get out relatively soon. But when it came back down, so I was long two, right? I got out. So here's one, and then here's two. All right, so I'm short two. I reversed, so I'm long two, and then I reversed again here, right? So now I've dug myself a little bit of a hole. So now so now I'm short. I added to it here, right? Added two here because I was tired and I wasn't going to go back and forth anymore. So right, I already had two reverses, so I'd already dug myself a little bit of hole. So I added two there, and so I had at least maybe four. One, two, three in the reverse. I had either four or maybe five. And so I exited three. All right, so I'm still, and now it's getting into push time frame. So I'm exiting three, right, and I'm in the push time frame, and then it pops up. Now this, as it turns out, now I'm in a better time frame of trading. So I at least recognize that, and here we are. It's coming again. This area still holds, right? I did exit three, but I had to reverse right on this scenario and added to it, and exited two, right? So I'm still long one apparently. So I'm still long one. So it comes back down, and I'm watching it, waiting for 7 o'clock, and it's coming back up after 7. I added one here, right, from this reversing kind of an area, and so I was able to get out here, and so I was out in flat, and so that is not what I want to do day in, day out. I mean, yeah, these back and forth things are a real problem. So you can dig a hole, and I had to dig myself out. But it turned out okay. But the low volume, right after a little bit after the open, they are trying to steal your money, and they really tried to steal my money today. All right, so it's after 7. Here's 7. Here's 7:03, and market is holding. So I went long here, right, and that trade was okay. And for whatever reason, everything on the kind of the downside today was not doing very well. Well, I mean, and the market is trying to recover. So I got fooled again a little bit here, right? I mean, it had an expansion, breaking under the EMA, breaking under the minute average, but it's still relatively early, and running, I took it right into VWAP, and that was the 3-minute close. So I got to be more conservative and go with the overall trend. So short here, right? A good, if I waited for a while, this is a great long entry. So a short one, so I reversed and added, and I was out here. So at least that one didn't turn into a long scenario, right? And then one more trade here, right? Didn't really get in prior to. I mean, it had a high here. This is yesterday's low, I think, right? And then yesterday's low, and then in here and out there, and I think there's one or two more trades that I took. One more, and probably a little bit late here to this trade. Got in here and really got out at the very last tick, right? So probably could have gotten in much sooner, a few ticks sooner. but was out. And at that point, I had 9 points gross. Yes, it was a little bit inefficient with what I went through. I'd rather, and like I mentioned this morning, I'd rather have 4 or 5 points much cleaner than 9 points gross with some commissions. Even if I netted more money, I'd rather have really efficient trades. And I didn't really. I mean, this would have been pretty good. Didn't really feel like trading that. I don't think I traded any more that I didn't call either. Even here would have been pretty good. I was thinking about trading here. Even here would have been pretty good, but didn't trade. All right, so I'm just trying to get this morning routine down, and I need to set up a new routine. Basically, I mean, so old habits die hard, right? So, and what I said earlier is still true, right? Once I get into some trades, then I'm looking for the next trade, and I'm just going to have to take the one trade, maybe two at most, and then yeah, maybe if I have to like walk away. If it's a low volume day, either walk away or put my mouse away or something, so that I don't trade until the push time frame, and I think I'll be more efficient. Um, I mean, I certainly believe that I'll be more efficient if I do that. All right, so I got to get a little bit more used to not trading as much in the early morning and trading a little bit more after 7, even though it might be boring at times. Yeah, so Facebook did come out. The market didn't hate it. It wasn't extremely volatile. So we'll see a little bit more. I'll read a little bit more in the morning to see what the people think about it. I did read more and more big bank CEOs are thinking that the Fed's are going to raise rates 1 or 2 more times and hold it for the rest of the year. So Goldman Sachs said that. Then J.P. Morgan came out and said that as well. All right. So any questions? I'm trying to hold myself accountable as much as that. Now yeah, this is the new EMA band, right? So yours is set for a fixed amount. You can put it however you want it. So this EMA band, I don't know. I'll think about when I'm going to release it. This one is based on volatility, and yours is just based on numbers, input numbers from the EMA itself, right? Kind of arbitrary. So yours is probably set in the neighborhood of about 4. I don't think I have the old one. Oh, I do. Yeah. So yours is set at 4, and the band size is 6. Is that right? Let me turn this one off. Oops. Turn this one on, and the new one off. Where's the new one? Ah, here it is. Okay. So yeah, so it starts at 4. Wow, 6 is huge. I mean, just like really telling you, stay away from there. Let me see where it goes. Well, on a low volume day, you never even see it. So if you want to make it smaller, and so 6 is kind of an arbitrary kind of number. If you want to make it smaller, let me get back to this area here. You could right click, select format indicators, go to the EMA band, and so instead of 6, you could go, cut it in half, like 3. It's still just kind of, and then that'll make it smaller. So it's a little bit, 4, the spacing of 4 is a little bit arbitrary. I mean, yeah, I did do some research, and that's not a bad number, but it's not dependent on volatility. It just depends on the distance from the EMA, and then the width is also kind of arbitrary. See, it never really hit these low volume days. It doesn't hit, so this one got kind of close. It's an interesting exercise. Let me just flip through the day. Low volume day. See, it never even hit the old EMA band. All right, so now let's do the same thing with the new one. Get back to the open. All right, so let's get back to the open. Turn that one off and the new one on. All right, so this is based on volatility. So you can see early in the day, then you know, it's got low volatility overnight, and then early in the morning, it's a much bigger chance that it's going to hit the EMA band, which is okay. And let's just go forward to see. It's getting closer here. Closer here. Almost touched it there. 7:30. Touched it here. Pulled back. Touched it here. Pulled back. So you see how it. You know, so it's calculating what the market activity is doing, right? And so see, even on a low volume day, the distance is going to be tighter, and it hit it several times and then pulled back. So it never really got too angry. See, hit it here, which is also coincidence with the 5-minute moving average, right? Almost hit it here, pulled up, came down almost. And what I've noticed is if there's something inside. If there's something inside, in this case, the 5-minute moving average was right on the edge, it has a tendency to strengthen it a little bit, right? So hit the 5-minute or very close to the 5-minute moving average, and pop it up. It popped up. Let's just keep going. You know, didn't get close here, right? Here it is in the EMA. This is in the little after 8:30, right? A little bit into the EMA band, and see that's probably what, mid S1, probably. It's a mid S somewhere, right? Hits mid S. It's also in the ATR range. Pulls back, gets a little bit closer, pulls back. You know, now it's probably time to go the other way a little bit, or at least take a break. EMA band, pulls back. EMA band resting up there for a while, pulls back. So yeah, I definitely think it's better. And like I said this morning, I tried that different calculation method, didn't improve it at all. So yeah, I'm just going to use this calculation method. And then the only thing I still want to try to do, and I haven't had any time to try to debug it, is to work to make it more CPU efficient, to get it to transfer data. And for whatever reason, it's got a problem with doing that. I don't know why. I mean, I transfer data. I mean, it does transfer data, it just doesn't pick it up very well. So it's not super critical. It's not a real complicated calculation. It does use an array and has to shift the array, and you can't do too many of those because that does take some CPU resources. But it only does it for this particular calculation. It only needs to do it once a minute, so it's not that big of a deal. I'm convincing myself to go ahead and work towards a release without trying to optimize it to the last nth degree. So I might do that because like you observed, we just went through the day or the morning, and it is better. Alrighty, anything else? Okay, you too. We will see you in the room soon, and have a very good evening.